So thanks so much for tuning in. We are live from the BSC at the Motor Trading session, and a very special guest, somebody who helps millions of investors grow their wealth through multiple schemes at the Aditya Birla Sun Life AMC, Mr. A. Bala. Bala, thank you so much for taking the time out. Lovely having you in at the outset. To you, your family and the team at Aditya Birla Mutual Fund, a very happy Diwali and a prosperous New Year.
Thank you, Niraj, for having me part of the show today. It's an auspicious day and Samvat 2080 beginning, and there's also the Diwali day, and I wish everyone, all the viewers and the investors and supporters of mutual fund industry a happy Diwali and a prosperous New Year.
Yeah, well, thank you for that. I'm sure all of viewers echo that sentiment that I'm saying as well. So what's your thought? I mean, there is a lot around the world happening currently, and over the next 6 to 8 months, it's a heavy calendar as well. What's your feeling about the new Samvat?
I think it's going to be, of course, interesting to see the new year on multiple angles. One, equity markets have been reflecting good amount of buoyancy, and earnings have been pretty good across the world. And there is a disconnect between the growth versus slowdown. So the growth is happening, employment market is very good in US, interest rates are high, and yet in equity market has been dying. It is going up. In the same way, from India point of view, the macroeconomic factors are very good. In multiple side, if you see, interest rates are stable, current account deficit is good, and foreign currency exchange are quite stable, and earnings of the companies have been very, very solid. And despite interest rates being high, the cost of borrowing has not gone up. Therefore, the consumer spending continues to be good, and rural economy is on the verge of showing some kind of uptake.
You think so?
So showing uptake. Of course, agriculture crop has been pretty decent. Of course, different views are coming. I only go by the consumption is coming from the mass as a population. So people actually look at upper end of the market and lower end of the market. I look at the middle end of the market. And the middle class population seems to be on the spending side. Gradually, they're coming back. And we've also seen a good amount of buoyancy in the real estate market across the country. But all these things are actually a good sign for the broad economy to do well. But having said that, I think the geopolitical risk, where it could have an impact, whether it's an oil price or the geopolitical risk, how long it will continue and where all will continue, these are some of the question marks we always remind. And second is, the US has been surprised on the growth side, and it can falter at any point of time. Even there's a marginal drop in the job recession kind of thing, if it comes in, then probably we'll see some bit of slowdown in the global economy. Therefore, it could have a negative impact on the market as well. Therefore, it's going to be very interesting to the overall momentum. And last but not the least, this year will also be an eventful year where there's going to be a general election. Absolutely no doubt that this will have a huge positive impact from a broader perspective, but still there's always some of the moving parts which will have to track. And that's where the market is always driven by that. It will always remain question mark. One good thing that remains from market buoyancy point of view, the flows have been very good.
Yes.
I think mutual funds flows have been very good. SC book has been rising, and incremental participation coming from investors each day have been going up. And there is some element of acceptance. Yes, mutual funds would always remain the permanent vehicle for one to save. And this something is a big sign, good sign. And I have not seen in my last 30 years of career, there's a kind of participation coming in the equity market through digital platform to direct participations. I think this is something my view will always remain. Whenever the flow is good, because there's always a belief that the flow is good, don't go against the flow. And you have to go through the tide and stay with the flow and stay with the tide. And that's something seems to be one other thing which is driving the market sentiment as of today.
Are subscriptions in your mid-cap and small-cap funds still open? Because there, the money seems to be coming in every month.
Of course, we kept it open because we don't generally close it out except reduce the ticket size and so on and so forth. Of course, the money has been chasing actually only the places where there has been a significant higher return with the equity. See, normally what happens in the equity market, even in the mutual funds, wherever the past returns are substantially higher than in the market, they tend to actually go and put money there. And wherever the performance actually is a little above the index or middle average, and that comes in the second considerations. And if you go by that principle, the money flow has been actually going only towards chasing the return, which also in my view is not something is great. It should happen, but that's the way public at large behave.
Yeah. So, but just a thought, when you guys talk internally about the kind of movement that has happened at the broader end of the spectrum, but the money is chasing. So the flow is there. Do you get a bit skeptical or skittish about how the forward returns in mid caps and small caps would be? Or is it still easy to deploy money coming in the mutual fund schemes at the mid cap and the small cap end? Because somebody was making this point that the whole host of new sectors that have gotten formed in the recent past are all at the broader end of the spectrum. We don't have too many large caps there, EMS, defense, etc.
I think the way market it evolves, right? I think when the market is small, you always find it difficult to find companies for you to make investment. And today, the number of sectors which got emerged in the last few years, the number of small size companies which are highly capable, having a high capability on the engineering and science and technology side. A lot of Indian companies are there, small size companies. They're all suddenly they are unleashing the potential for them to create value for themselves first as a business person, as well as for the shareholders. So therefore, that's something that always happens. The other issue, of course, is the valuations. While it can vary from one sector to other sectors, but there are certain sectors that also looks promising from the future outlook point of view. That's something is I don't think it's by identifying companies for investing is an issue. I think where the issue will come is if by any chance there is a crash in the market and there is redemptions, then how would the market will behave and so on and so forth. That's something we'll have to see. But again, given the fact that money managers, when we identify companies, they will look at not only fundamentals, secondly the liquidity, and then how the portfolio construction has to happen. Mix of large cap versus small cap and mid cap. Therefore, that construction of the portfolio, once it is taken care, I don't think one should worry about it. Again, somebody has coming the investment for about 3-5 year period, then not an issue. If somebody comes for 6 months, saying in 6 months I'll get 15% return and annualized comes about 30%, therefore after 6 months I'll move out. Such kind of investment, such kind of behavior in the market can at some point of time make people get disappointed.
Okay. There have been a number of very interesting schemes that have come in from the AMC space, right? Your House and a few others, a US Treasury Fund, so on and so forth. What is the most interesting and innovative product, according to you, in the last 6 months that investors should take note of for the next, not just the next Samvat, but the next few Samvats?
So of course, given the fact that equity market has been rising quite substantially, and we have seen one of the best return even during this GDP growth close to about say 7.2%, and the equity market has given one of the best return that has delivered. But that being the case, definitely it's a hybrid funds becomes one of the natural choice because it actually protects the portfolio from any potential volatility that could come from the equity market. Second, the US table, what you just mentioned about, we saw an opportunity to invest in overseas market given the fact the best of the sovereign in the world, which is the US, which is giving about 4.85% on a 10-year bond deals. 30-year is almost about 5%. 2-year is close to about 5%. And money is being remitted overseas. And most of the Indian investors also like to actually remit money overseas, not for their investment purpose, is for the future education purpose for the kids and so on and so forth. Therefore, we launched this fund for 2 reasons. One, we are providing a vehicle for making a dollar investment to be made through the mutual fund. Second, you are investing in a US bond, which is one of the highest rated bond in the country, sovereign in the world, which is sovereign bond, offering at one of the highest possible rate. From 2008 till date, this is the highest rate at which it's trading. And third, of course, is the rupee depreciation if at all happens, because rupee has behaved quite nicely in India. Assuming scenario, some point of time, rupee depreciate by 1 or 2%, you get their benefits as well. And next year, in 2024, and there is high probability that US will reverse the gear on the interest rates, hike from neutral to cutting cycles, which could probably come in 2024 or 25. As the interest rate cycle starts coming down, there could be a correlation because equity market could actually be going the other way around. I mean, when the interest rates drop, it drops because of the mild recession kind of thing. Then equity market may get stabilized and the bond market will rally. Therefore, it's always better to hedge the portfolio. I think it's something if you think that it's going to be permanent, that is the time I think you will end up making some mistakes. I think I believe having good mix of fixed income and equity through the hybrid funds and funds like this to put your dollar savings for overseas market, overseas any travel purpose or investment purpose or education purpose could be a good option to look at.
Got it. I have one final question. I know you don't talk stock sectors, obviously you're the CEO, but I would love to understand what do you think of the asset management business per se. Now that the SIP flows are so high, other flows are very high, and capital market investors have really gone up substantially. Do you think the businesses which have been maybe under a bit of pressure on the yield side because of various factors, could see some momentum in the next 5, 6, 7 years?
Momentum for the MF industries?
Yes, for the AMC
general,
business.
AMC business, I think the momentum will be very, very high. For one simple reason, the financial savings in the country increasingly finding its way to the capital market through the mutual funds. And savings in general is a pattern moving away from traditional savings like gold and real estate to the financial asset class, moving away even from fixed deposit. Therefore, my assumption is the next 5 years, if you look at it, the mutual industry size will become 50% of the banking industry size. And today we are about 20% of the banking industry size. Next 5, 7 years, it will become 50% of the banking industry size. At the end of the day, every citizen of the country have to make money which is more than a certain percentage of the beating the inflation. Because the cost of inflation, if you have to take, at least one has to target anywhere between 9 to 11%.
Sure.
In my view, that could potentially come in the mutual fund industry over a period of time. Therefore, I will not say we are just scratch the surface. I think the awareness for investing in mutual funds, I think each passing years have been going up. The next 10 years will be the great growth, which will be equivalent to last 30 years what you have done.
Got it.
Yeah.
Great. Okay. Well, thank you so much, Mr. Bala, for joining us today out at the BSC and giving us your thoughts. And once again, to you and team, a very happy Diwali and a prosperous New Year.
Yeah. Same. Happy Diwali, Neeraj, and happy Diwali to your family and friends and relatives.
Thank you so much. And viewers, thanks for tuning in.